And the next panel will be on the very interesting topic of where to invest in shipping today. By the way, while everybody is coming up, I'd like to share a story with Martin. We did a webinar with Martin that was supposed to last for 45 minutes. And then as we got in and people started asking questions, Martin was okay. He said, let's go. To make a long story short, that 45-minute webinar lasted for 3 hours. It was a marathon one. So anyway, Felix, thank you to everybody for joining us. And
good afternoon. So, first of all, introducing our great panel that we have here today. On my right is Christoph Toepfer, Rowil Ponta, John Wessel, Hollaender, and Paulo Almeida. And we shall have the pleasure of talking about charting corporate and investment strategy in the shipping industry. Now, maybe a question, first of all, to the entire group of my panel, but having heard everything that's going on in the maritime industry today, war, sanctions, regulation, uncertainty in terms of fuel, designs, etc. Is this actually an industry you want to invest in today, or is it very difficult for you? Paulo, maybe starting with you.
I don't want to sort of set aside the concerns that you raised, Felix and the other panelists and speakers have raised in terms of huge areas of uncertainty in the industry, both exogenous and endogenous. Exogenous, the geopolitical situation, macroeconomic situation, especially the one that we've been facing in the UK as well over the past few months, and then within the industry, we have clearly a long voyage to decarbonization, which has been touched on, of course. But clearly, shipping it's an essential industry. It produces over the cycle decent cash flows if investing is done well, and most importantly, or not necessarily most importantly, but one of the key investment themes that we've seen over the past couple of years, and it's really hit well with our target investors, is one, it continues to show that it's a very strong diversifier in terms of, if you look at what's happened in the past couple of years, that many times when things go wrong in the world, COVID, attacks on Saudi oil facilities, sanctions, things that that in many ways are bad for most of the world, sometimes are quite positive for shipping. Not that we want to benefit from other people's misery, but diversification is important, and also shipping. I'm not going to say that it always performs well in periods of high inflation, because Dr. Toepfer has called me out on that one before. But in many periods of high inflation, shipping has performed quite well, and that's also something that's very valuable to many investors whose liabilities are linked to inflation.
Yeah, and I think we'll touch upon that as well. But I think you mentioned a very important point with regard to investors, and giving uncertainty and avoiding mistakes. The source of capital is quite important. And maybe, John, your perspective in terms of, is it a good time to actually invest in shipping today or not? Like, representing your principles a bit more.
Sure. Well, I can only follow Paulo, and I wouldn't dare to challenge Mr. Toepfer, but maybe I would call it unforeseen inflation or very sudden inflation. I think shipping remains a completely uncorrelated asset class of global stock markets, and yes, it is still interesting, and there continues to be tax-efficient structures, so yes, it continues to be a good investment.
Christoph, Mr. Ponta, any differing views, or are you sitting on your hands, very active at the moment, or what are your activities?
Yeah, but look, my view is that shipping is always going to be there, of course. It's the second oldest profession in the world, and there will always be shipping. It also will always be volatile, so it will always have something to offer for younger people as well. It is a technology business to a large extent. It's a business that right now, this conference illustrates this quite clearly. Everything is about sustainability, ESG, etc. Nobody talks about demand and supply anymore, seems like it. But ultimately, the successful investment will still come down to a large extent to demand and supply. Now, it doesn't mean that the other topics are not important, but it seems to be almost sometimes ignored or forgotten. Of course, at this time right now, it's a difficult market. Everything we hear from our investors, we see it ourselves. The word peak cycle. Everything seems expensive. So, but I remember back in 2010, Mr. Budelmann. Some people still remember him. He said to me once, one of the most difficult things for ship owners is to sit on their hands. Sometimes there's periods where you have to sit on your hands. Some people can do it easier. A private ship owner can probably do this easier than someone like us. We have to kind of always develop new ideas. But there will be new opportunities coming, and one just has to be open-minded and aware and spend a lot of time reading up and figuring out what's happening.
Anything to add from your side, or are we all in quorum? Because if yes, then maybe moving on to Paulo, it would be just interesting to hear you say, yes, shipping offers an attractive return also for the investor side. What sectors are you focused on today? You have been very active on the container side. What's your outlook there? We know you have maybe a bit on the selling side as well. So what's your expectation? Where will the projects come from in the next, say, 18 months or so for you and for your investors?
I think it's fairly public knowledge that we have been divesting from container ships over the past 12 to 18 months, not because we had we didn't take a view that in the summer of 2022 that freight rates would start declining, and this would lead to large drops in time charter rates, etc. But we did take a view that as Christoph rightly said, you have to look at supply demand. And again, not that we particularly thought that demand trends were very negative, but we did think that there was very little, if any, upside in demand from where we were a year ago, and clearly there's a lot of supply coming. So we significantly reduced our exposure to container ships, although we still have some, primarily on longer term charters, and we put more capital to work in tankers. Not thinking that the market would be anywhere near as strong as it actually is today, but from a basic supply-demand situation, order book is very small in tankers and in bulkers. Global inventories of product were very, very low after the huge floating storage boom of 2020, and we knew that demand would come back. Again, not having a very firm view that the world would fully reopen after COVID, but knowing that those inventories had to be rebuilt, and that's exactly what's happened. And of course, it's the tanker markets, especially product, but also crude now, have been outperforming primarily because of the dislocations caused by sanctions against Russia. And again, we don't want to benefit from other people's difficult situations, but it just does show that in many cases, geopolitical events do benefit shipping, because shipping is normally so efficient that when something changes, it tends to reduce supply or increase demand. When you have both, of course, it's an excellent combination.
So, John, your group is also quite active on the tanker side. Is that something that you would echo? And maybe as we're talking also a bit about planning, etc., how do you finance your investments today? And do you see an abundance of capital, maybe outside capital, next to your shareholders? Speaking about the banks, do you see any restrictions now following the increase in interest rates or anything like that? And maybe that's also open for the entire group, just to hear what your experience at the moment is.
That's a hell of a lot of questions. Yes, probably tankers. Yes, I think in general it is still important as ever to speak to your customers and listen to what they want, and then develop opportunities together with them. We have done so together with the oil majors, but also oil traders, and still continue to invest in the tanker markets, yes. That is probably not the classic asset play, but it still works from a return perspective. In terms of capital, maybe addressing the banks first, I think we still see continued inflow of debt into the market from traditional banks, new or traditional banks coming back to the market, but also hedge fund-backed banks, and the whole space tends to be very crowded. I think if you've been a bank in the last 2 years, it was great times. You were able to lend at good returns and at a significantly low collateral level. However, these, especially when you were focusing on older vessels, 8 to 12 years old, but now these vessels have all been sold, especially in the container segment, and maybe there are some opportunities in the tanker sector, as I mentioned, but apart from that, I think the space is getting very crowded now. Many banks have a lot of capital to deploy, so I think it will be very difficult for banks to build up a good loan book, and the margins probably will be decreased and probably at higher risk levels. Having said that, that is obviously good for ship owners. We are not complaining. And if we see something why the banks would retreat, then it is increased uncertainty about regulations on all fronts, especially from traditional lenders. And luckily, here in the room, a lot of lawyers who are more than willing to help with that, especially within 150 pages framework contracts. However, if they will retreat, then I fear only for the increasing regulations. Which other question was there of the many?
No, I think you basically addressed everything that we asked. So I think that was very useful.
I think, John, I would echo that. The availability of capital is not our core problem. Also, referring to Martin's opening speech here after lunch, I think the picture of the investment volume that's coming towards the industry is, whether it's this figure or that figure, but it's huge. And that in an environment where we have regulation, difficult political environment, sanctions, block building, Brexit in between as a smaller issue even these days. Technology changes, technology developments, not clear which one will prevail. So in that uncertain scenario, to ramp up this amount of investment will be difficult. And I think it's quite likely to expect that there will be a little bit strategic thinking, under investments, at least in segments of our industry, which then again brings the interesting investment opportunities I think that we are all, when we do investments, are really looking for. So in a sense, I think it's an exciting time to employ capital in the industry. It is maybe with more chances, but also with higher risks than we have seen in the past. Usually these things correlate. But the environment does offer strategic opportunities.
Do you believe it has become more difficult to make investment decisions given all these uncertainties, or because the shipping cycles have been up and down over years? So you believe that it has fundamentally changed in terms of how you go about, how you analyze projects, etc.? Or is that still the same toolkit? I think that's a question really applied to all, to be honest. So
some things are the same, like supply and demand, fundamentals are the same, but there are added complication factors, technology decisions, regulatory framework, which makes the execution of transactions sometimes more difficult, additional requirements. There are obstacles. There are obstacles, but obstacles, again, they also create opportunities for those who are willing to put in the extra effort to deal with the obstacles.
I mean, putting in the extra effort, does that mean you have to hire new people, new teams that also look into more, let's say, energy transition? Is that something that maybe also changes the investment teams of the gentlemen here at the table? Or have you invested in that? Is that something that you are going to invest in the future? Any thoughts on that?
Yeah, I'll take that. That's been a key. And sorry, I didn't mean to say I'd only take it, but I'm happy to take that first. That's been probably our biggest area of investment over the past 18 or 24 months, adding both people in London, US, and Cyprus. Actually, US is a new area for us geographically. In terms of how we improve the carbon footprint of our current fleet, which is probably about one third of that mix, and 2/3 identifying investment opportunities and matching deal pipeline with new sources of capital for us, or not necessarily new types of sources of capital. We've historically had 80 or 90% of our capital from large pension funds. We think that'll continue to be the case, but they may be pension funds from other parts of the world than they have been historically, who are very, very interested in decarbonization. It's a huge theme for many institutional investors, and of course, we don't have all the answers, but I think we're going to make a lot of progress on that over the next few years.
Right. Okay.
Well, and actually, adding to that, which I just mentioned, the pressure being put on from charter side, but also from the debt side in particular, will actually lead to more human capacity being added to the companies in order to apply and not only apply, but also fulfill the requirements we all have, this industry has to face. And actually sourcing this human capital is probably a complete different panel discussion, but definitely an issue.
Yeah, I think so. You primarily, sorry.
If you want to put it in an investment perspective, then we can put it on the panel here. I think we have to invest in human resources, not only steel.
Absolutely. Now, I think what we have touched upon quite a lot is regulation, sanctions, but talking a bit about also geopolitical tensions at the moment, and maybe Hannes also, when considering ship owners today deciding between new builds and secondhand tonnage, has there been a paradigm shift also with regard to China? Have there been any worries also from the banking side, maybe that people are not so open to lend towards Chinese vessels? Is there anything that you're observing from your clients?
Yeah, that's actually quite a lot of time I spent exactly on that subject, and that worries me a lot. Indeed, I'm flying to China on Monday. I will stay 10 days in quarantine, being imprisoned there for 10 days. So let's see. But I'm concerned about the shipbuilding capacity in the future. Actually, China is somewhat system relevant for us in shipping, and we all agree, and your initial question was, is it a good time to invest into shipping? We all need shipping. I think we don't need to argue about that. It's very essential for our globalized world. Even if we de-globalize a little bit, it remains very essential. We have a transition for the propulsion concepts ongoing. We need to work out a new fleet with new propulsion concepts. But if this system-relevant player, China, is getting into a situation where traveling becomes more difficult, where we may be not feeling so welcome there anymore. Plus, and this is now very essential, if our financial institutions are maybe not willing to finance these products anymore. That's what worries me a lot. And I've had a recent discussion with one of our partners who wanted to place an order, and he declined, not due to the market development, but he advised that the bank is not willing to finance the Chinese risk anymore. That worries me, to be honest. I'm not so much worried about the concepts for our new propulsion technologies. A lot of people in our industry are working on that, and I think we have now quite a setup or quite a different bunch of setups which we can choose from. I find personally a few segments very interesting to invest into. There are, if you look at the different order books right now, for example, on the container side, I'm not too sure. Maybe it was a smart move to sell many ships. But there are certain segments at Rowil. You are also very active in that field. On the rather smaller ship side, where I'm expecting, for example, ships being employed in the renewable industry, which we forecast a lot of demand for in the future, and where the new building order books look not so big, actually pretty small. And so if you're looking into those, I think shipping investment today is still super interesting. Which other question did I miss?
No, I think you actually covered basically
Okay.
what we asked, but maybe a question just in the panel, Rowil or Christoph, would you order a ship in China today? Irrespective of the sector,
that's a good
right?
one
So
for you, I
just,
think.
just in terms of the risk, is that something that you would be willing to do?
Yeah, Hannes just said that he's worried about the shipyard capacity given the geopolitical situation and China and banks not willing to potentially take Chinese risk, and this may be the same for some of the capital on the equity side. For me, this excites me, you know, because obviously,
Yes.
I mean, you know, as a broker, of course, you want a transaction, so it's different. But as someone, you know, who invests into shipping, having limited shipyard capacity at a time when there is potentially huge demand eventually coming. You know, Martin Stoppard suggested in the early 30s or mid 30s for this to happen. We obviously all know that the order book is low generally, except maybe containers, but otherwise it's low because of technology concerns, etc. And if you're then coming into a phase in the next few years, how long it may take, I don't know, but where actually shipyard capacity in China is maybe not as readily available, it's obviously a fantastic time for ship owners.
That's exactly the point, Christoph. That's exactly the point. The lower the supply of shipyard capacity is, the better for us in the industry. That's a perfect storm.
But time being, I would say we would order ships in China. If the sanctions would not allow that, or other things would not allow a different story, but time being, I think business is ongoing despite the political situation, which is becoming more cloudy.
Do you see any restrictions from your capital to do that? For example, maybe Paulo, or also from your investors, is that something where you say, hey, we get pushback in terms of, for example, moving into China to acquire vessels? Is there a risk that is perceived, or is that not the case?
That is not something that we have really seen to any extent at all, actually. You know, clearly some of the cloudiness in the Chinese situation has only become, well, the cloudiness has become more cloudy in the past 2 or 3 weeks with the recent developments. Although it was I think the consensus was that the precedent of 2 terms would not be respected or not happen again this time around. But no, I really don't think that is that the situation is you know, clearly there's some concern there, but not that would prevent looking at new builds in China, but possibly at sort of 3rd, 4th tier shipyards, but that has very little to do with the political situation.
Yeah, that has
Could change, but I don't see that as an issue right now.
Okay, no, I think that's very interesting, and I think maybe switching gears a little bit, we have talked obviously a lot about containers and the different sectors, but maybe speaking to someone who actually has become quite a big of an offshore owner these days as well. So with regard to Christoph and talking a bit how diversified your fleet is, and just having made that push into the offshore sector very early, maybe you can just walk us through a little bit how you decided to move into that segment at the time, and then maybe how has that also helped you to balance your portfolio or your fleet portfolio today? I know everyone on the panel is quite diversified, but I think your move has been quite significant. And would be great to hear that.
Yeah, I think in general, obviously here in Hamburg, we were known as a container owner, which is no longer really the case. We still have about 10 container ships, but we are an organization where we have to continuously challenge ourselves and think about new ideas and think about what else we can do. And so we were we sold off 40 container ships in the last 24 months. And I spent probably half of my time over the last 12 months just looking offshore. We felt that offshore, and this is basically back in 2021, we felt that offshore was underinvested, lack of capital, ESG concerns or ESG limitations for capital to move in, existing players all in distress, banks have rolled the debt 3 or 4 times, tired of it. But at the same time, on the demand supply side, you could see that it was an underinvested sector where there was also capital spending was down on the exploration side and production side, and that there had to come a change. We all see the graphs, and from Martin Stopford as well, how suddenly oil has been going up and suddenly jinx, it's like a pyramid. It's suddenly from now on it's going to go down. Not sure that's always going to work like this. And also, even if it goes down on that trajectory, you will still have to have a lot of exploration production activities, and the capital is not sometimes there. So we looked at it quite intensively. We had started to dip our toes into the water back in 18-19. We thought timing was great. Then COVID told us slightly different on that side of the business. Luckily, worked out on containers. But then we really doubled down heavily last year into the offshore market and built an offshore fleet. We built a team in Norway that manages this fleet. And it's been obviously great timing. Lucky, but better be lucky than smart. So we take that. And it's it's a sector that excites us, but there's other things. We as an organization, we are maybe unknown also to many here in Hamburg. We are probably one of the largest operators of short sea chemical tankers in Europe. We operate about 25 chemical tankers. Again, it's a sector that we didn't divest of. We had the feeling it was an underinvested sector. Too little capital look into it, no banks, no equity, and you had actually the declining fleet. But at the same time, you as soon as the market was going to see a little bit of uptake, it was going to be showing a shortage of supply. And we had the best chemical tanker year ever so far this year. So there's always opportunities. I said earlier that sometimes it's difficult. This market is difficult right now. Offshore has also adjusted up. We still believe there are opportunities. We still believe that cycle has legs to run. But obviously, it's not as cheap anymore to get into it as what it was last year. But just look around, and you will see opportunities coming your way. And this market, will see some distress coming again as well at some stage, and it will come from somewhere we just didn't expect it to come from.
Well, interesting also that you decided to build your own team that's going to do that. So, was it ever a consideration, either to just outsource everything, or was it always the aim, we want to internalize it, or you could have, for example, also taken over one of the distressed offshore companies that are out there?
Yeah, we looked at acquiring some of the existing Norwegian owners, and if there's some Norwegians in the room, they know what I mean. Then, when you look at the west coast of Norway, the owners there are not necessarily, they're very stuck in their own way. And for someone to come from London, they see us as a kind of a hedge fund, aggressive guys and whatever. So, which we are not. But
unlike Hamburg.
Yeah, but difficult to marry this. And as an organization, we have always focused on building our own commercial outfit. So we have outsourced a lot in the past, always technical management, and worked with many of the Hamburg owners on that. But commercially, we've done it on the container side, we've done on the chemical side, and also on the offshore side. We've always built generally our own commercial platforms, and using that as basically then a leg to potentially also go into other things like technical. But taking over in this case was, in our view, not attractive, or the right player wasn't there. And so we had the right team, and we were very lucky to find this team at the right moment in time and able to basically take that as a core for our strategy, because some of the anchor handlers we bought are very sophisticated animals, and I wouldn't have a clue how to operate them. Just one other thing that I want to just maybe add to it. One of the things that was very interesting for our offshore strategy was that some of the assets, or most of the assets we bought last year, all had a play to role in the energy transition, and that was very much also key of our thesis that these assets are very, very suitable for conversions into SOVs. On one side, that's for the PSVs, but also our anchor handlers, which we bought, are going to be the core of the backbone for the floating wind farm market in the future. And within 2 weeks of having actually agreed the purchase of these vessels, even hadn't taken delivery, we had the first offshore wind farm market player coming to us and saying, we need those ships in 3 years' time. And in the meantime, we have a second one coming. And so this is something that's also being understood now. Maybe 12 months ago, people hadn't yet had it on the radar as much. But some of these assets are key for the energy transitions into wind. And we just don't have any new buildings. We don't have any investments or a lack of investments into new buildings for that floating wind farm market. Hence, conversions and also using existing assets will be a fantastic additional demand coming into a sector that already is actually having demand coming up from the exploration and production side.
I think conversions is a very, very interesting topic, and I mean, Hannes has been also, or your group has also been active in the offshore PSV space. Do you still see opportunities to do that today, or is that more difficult where prices have gone?
If you simply look at demand and supply from the heavy lift and multipurpose market, as well as short sea, which are active in that field as well, and that's what markets we are specifically researching a lot. I'm extremely bullish about those markets. I'm expecting a lot of demand for it due to the energy transition which will come, and I think the geopolitical situation is just boosting it. As Paulo has rightly put it, I think politically you put it right, these situations are unfortunately good for shipping.
Rowil, is take of your group. I mean, you have been successfully also diversifying into tankers and other sectors away from containers originally. What's your approach usually when you go about that?
I must say, similar to Christoph, we look for the investment opportunities, and quite often then, as the business is moving, investments are allocated, you have strong investments in some segments, less in others. You can strategically, these underinvestments are kind of visible, kind of detectable, like your decisions to move into offshore or chemical tankers. Doesn't mean that at a specific market moment you say, within these 3 months is exactly the window, but strategically we can see we should maybe move between the segments. There remain interesting investment opportunities. The thing is, sometimes we have to move out of the segments that are mainstream, that we can, on a handy size or Supramax or Cape size, I can follow the index every day, which is very convenient. Makes it easy to explain to investors, but and sometimes it's a good segment to invest in. Sometimes maybe I have to go to segments that are less transparent, less visible, and there's a lot of those in shipping. In the smaller ship segment, which Hannes mentioned, from starting with from coaster vessels to smaller MPPs to bigger MPPs to heavy lift, moving into the offshore wind scenery. There are a lot of small segments here and there where I think we can take a bet that parts of this are underinvested currently.
Oh, fully noted. I guess we've talked a lot about now the traditional asset classes, also alternative vessel types that you could invest in. Now, what we've recently witnessed, also coming from the Norwegian market, we've recently really witnessed quite a strong shift also from traditional ship owners or ship owning families towards more financial investments. So meaning taking considerable positions within listed entities, alternatively playing the bond market in different sectors that people are convinced they are offering them the right type of risk and return. I understand obviously that your mandates, in particular on the external capital, might prevent you from doing so. But if you were in a position where you had to choose between investing into steel or, let's say, a bond of a company with 50% loan to value that yields you 10 plus yield to maturity over 3 years, what would you do? To the group. We can start from Paulo, but I'm indifferent really.
Well, I think that one of the things that we've been talking about is the value of diversification if we own different asset types. So the answer to your question, Felix, must be obviously that we'd try to do a little bit of both, wouldn't it? And then have the opportunity to move capital from one to the other as well, including potentially looking at, I mean, bonds or loans is one thing. I don't think that any of us, perhaps other than with small amounts of personal capital, are investing much in the listed equity space, where there's a lot more operational and financial leverage than how we run our own investments. But I think that today, like you said, with money having time value again, and capital being more difficult to come by, that there will be some private debt investments that probably are attractive as part of a portfolio.
Well, maybe to add to that, we would certainly look at this as well, also just from a diversification perspective. However, especially when it comes to like capital-intense industry like the offshore industry, even probably going bigger than offshore vessels, going into rigs, there are certainly things we would look at. But as Paulo said, we wouldn't be in this business if we wouldn't focus on the operational advantage we have, and we also wouldn't invest in it if we couldn't judge these opportunities by the operational background we have. So in the end, this is, although this might be now an interesting moment to look at, I don't think this is a long-term investment philosophy.
Any views?
I mean, if you ask me personally, I would always tend to invest something that is operational. That's probably why we are sitting here as being investors in ships, in steel, in operation, in people. But from an analytical point of view, yes, it does make sense to diversify. We have done it only very occasional. Sometimes when you are in the market and you take a view on what steel you are buying, you can also take a view what equities you would be buying, how an industry segment, container shipping, for example, should develop. So there were certainly opportunities that we took buying relatively early on some container shares, which actually paid out very well, while selling the container ships at around the same time. So yeah, there are these opportunities to go into equities, but it's not our natural hunting ground.
Yeah, I mean, I would say I consider shipping bonds as a good parking lot right now for some money. You have bonds, basically, most of the bonds are probably between 6 to 10% yield right now, which is pretty attractive. It's below inflation. Depends again about your inflation basket. Your basket might be different than what the statistics say, because maybe new buildings are not going to be as expensive in 12 to 18 months' time, and so actually maybe there's a negative inflation. In the meantime, you park your money in some shipping bonds. Sure, absolutely. I mean, I think that's a good opportunity there.
Yeah.
Okay, we're almost done on time, I see. So maybe just as a rounding up for the group, just in 2 words, next 12 to 24 months, where would you put your money if you had to invest in one vessel? Starting with Christoph.
Offshore.
Opportunistic. Price, money talks if there's the right price. But I would expect the right price in offshore or in selected heavy lift multi-purpose segment.
Crude tankers.
Heavy lift. Always heavy lift.
chemical tankers.
Very diverse. So, thank you very much, everyone.